All right, my name is Gustavo Zapz, and I'm going to start posting more on YouTube. So let's begin. I want to be able to convey information that most people are not willing to give you. And I also want to build a level of trust here, because the truth is, the reason I barely post on YouTube is because all you got to do is type in trading, and you're just going to get a million videos of people promising you all these different ways to flip money and do this and do that. I've been in this industry for 13 going on 14 years. I've been teaching people for 8 years. I've been doing this for a very long time at a high level, and I think it's time that we provide a little more value out there in the YouTube space. So let's look at this. First of all, if you ever want to contact me, all you have to do is go to my Instagram, find me there. It's the one with the verified check. You're going to see things like money that I've made in funding companies, personal results on personal accounts, student results, right, from our community. We do webinars, we do daily updating, things like that. But today's video is not about promoting my community. It is about answering a simple question. Do you need a lot of money to become profitable in the market? So last week on Friday, I loaded an account with $1,200. I did a side account. This has nothing to do with the personals that I've been growing for years or my funded accounts. This was something like a side quest. And the goal was to prove to one of my private one-on-one students that he does not need to go and load an account with a credit card, go out there and get a loan, or blow a bunch of money in the attempt to get a funded account. Funding is a gift, it's an opportunity, but it's not necessary. If you've been in the industry as long as I have, getting funded was never a thought up until 3 or 4 years ago. So for most people, this is now an opportunity to accelerate your growth. But I am the guy who is going to tell you the truth, that without skill and experience, you're just throwing money into the market for somebody else to profit out of your loss. That's really what's going to happen to you. So instead of just saying it, every now and then I like to do these little side missions. Normally, the numbers that people see from me look like this. So for example, this is one of the funding companies that I have. I have multiple funded accounts. I also have, like I said, personal accounts. I want to convey that in this video. You have to take care of your personal accounts as well. Personal accounts allow you to do whatever you want to do with your money. Also, it's important in the times that we live in to have control of what happens to your accounts, because with funded companies, you are a contractor. Again, I believe that what you should do is have both. If you have the skill, there's nothing stopping you from dual accounting, from putting the same trades in multiple accounts. The key is, for most people when they're trading, this is far past what they can do because they're just launching entries into the market. So this right here is what most people have seen from me, but I don't want to focus on that today. I want to focus on personal. So like I said, last Friday, I decided what I'm going to do is I'm going to load $1,200 into the account. So it looks like this. As you can see on the top left corner, this is the live account. Also, as you can see on the bottom right corner, I am connected. So this is not some Fugazi website or some sort of trickery. This is just what it is. I'm inside of one of my accounts right now. This is the one that I created last Friday. As you can see here, the balance, an internal transfer of $1,201, that's the deposit. I've already withdrawn $10,800, and that means that the profit for this account is $19,880. And I also do have a current entry running at $800. So let me give you some disclaimers here. First things first, you don't create numbers like that with proper risk management. On a personal account, my personal accounts, the accounts that I've been growing for many years, I would never, let me repeat that, never treat my money like that. Notice that what I put into the account is something that from the moment on Friday, five trading days ago, from the moment that I funded that account, that money, in my mind, was gone, which is the best advice that anyone can give you. You do not load money into your account that you're not willing to lose. I know that sounds odd, but the more emotional attachment that you have to the money that you've deposited, it's less likely that you're going to allow your great trades to play out. You're going to be trading with fear. And once there's emotion implemented into your decision making when it comes to the market, when it comes to your management of entry, of management of trade, and then the eventual exits, you're already starting off on the wrong foot. So that's first thing. Yes, it is a hyper risk, full tilt. Now, here's the deal. I have a community. And inside of that community, I share what it is I am trying to do in the market at all times, right? So it's like a live journal. We don't do signals, right? It's been some years since I've had a signal group. I wasn't a fan of that environment. I wasn't a fan of the type of individual that attracts. So for the last 7 years, I've dedicated myself to a community format where there's people inside of this community and I basically give them daily updates. We do live webinars, basically an understanding of what it is I'm looking to do in the market. We also have educational courses, a beginner and advanced course. And inside of this community, I tell them basically what my setups are going to be. And if you look inside of the community chat, you see, everyone's like in a celebratory mood. People post their own entries, right? Nice, solid moments. And of course, like I said, some of these people are making some real money and they become testimonials, and you go check that out on my Instagram. So again, how do you make this happen? Well, in my opinion, you make it happen by finding high tier setups. That's what you need. You need to have the ability to find a high tier setup and then put in the risk. Most people are trading the way that I traded this account is how most people trade. They enter the market in a way where 1 or 2 losses and that account is basically 50% gone. That is not supposed to be something that you do with money that you care about. That is supposed to be something that you do with, like I like to say, a side quest account, a side mission account, a news heavy account. You're taking a 50-50 risk at best with this money. So you better be sure that the setup that you have can even provide you the possibility of a real trend. So what I'm going to do is I'm going to cover one of these trades, maybe 2 of them, show you how I got here and remind you of this main point. You don't need to go and deposit with your credit card. You don't need to go with your credit card and buy a bunch of crypto to then deposit into your account and hope that you get this money back. You don't need to go get a personal loan. You don't need to spend a bunch of money on funded accounts. You don't need to ask someone to pass your fundeds. You don't need someone to flip your money. You don't need any of that. What you need is personal skill and experience. It's going to take you years, and that's okay. So let's look at the market together. Let's look at some of these plays. I'm going to teach you some basic things, and then we'll go from there. So inside of the community that I have, like I said, I provide them setups. So if we look at the screen here, you're going to see these little red check marks. And those red check marks are places where there have been entries at some point. And one of my personal sayings is, if I'm lying, I'm dying, because anything that I ever say can be justified, verified, double checked, triple checked inside of our community. Because what I like to do is I like to give out setups and the understanding behind it, plus the educational concepts to enter, right? So it's before, during, and after. Now, the before. Finding high tier setups, very generic. Everybody says this. It's about the higher frame. When you know the market has a highly reactive price, you're going to get highly reactive moves, which are in your benefit, because if I am trying to make money, I need the market to move. That's why most concepts out there, doesn't matter what the trading style is, you're going to find some sort of search for liquidity. That's what most people are looking for in the market. Liquidity, money, movement, the ability for the chart to actually give you the directional bias that it is you want. So if we look at the way it played out for me, you would think it's the big buy that I took for this trade. Actually, it was a sell. It was a sell before the big move happened. That's what started everything. The sell was the moneymaker for me. For this account. On my other accounts, it was the buy. There was a lot of people who took that 700 plus pip buy, this one, but the sell was what worked out for us. So let's look at gold together. So most traders, the failure rate is extremely high, right? You look at 10 traders, 8 of them are probably not making it. You're going to have one person who's breaking even and one person who's actually profitable. That's the numbers. Now, does that mean that has to be you? No. I mean, look at me, regular person, living proof that this is very possible. It just takes more time than most people are willing to wait on. And it also takes a certain amount of love for this thing that you're doing. I mean, I don't know anyone who excels at something that they do if they don't love it, because usually they're doing it way more than anyone else because they do it on their off time. They think about it when they're not even in front of the market, right? You think of any high level anything, and that person usually has a strong connection to whatever it is that they do. For most people, they get into this industry because they just want to make money. And what most people find out, it's not as easy as it looks. And that's most things. It doesn't matter what you're doing. You could be in sales. You can be in real estate. You can open up a business. You can invest in businesses. If you don't understand the environment that you're in, you're destined to fail. This is common sense. But if you think about it, what ends up happening is people get into their emotions. They want to get the Lambo. They want the mansion. They want this. They want that. They want to be able to quit their job and pee on the desk and tell their boss to go F himself and the whole deal. You can't do any of that until you go through the actual learning phase of this. Education, experience, confidence, the ability to execute, that takes time. And that, my friends, is common sense. That is something that you know in your heart of hearts is true. Now, it's whether or not you're going to want to deal with the journey. So that's that. Now, let's look at gold together. Let's discuss. Now, I'm not going to break it down fully. I'm going to tell you how I came up with my trade. Last week on Friday, we ended the week with a nice, solid situation. This is the all-time high from the end of last year, okay? We hit an all-time high, and then the market had a full-on consolidation. That's what happened. Eventually, we had a nice little breakout. Now, as you can see, I'm not reinventing the wheel here. I'm finding structure. I'm drawing trends. I'm looking at the flow of the market, and this is something that I heavily do. I call it the Zapz map. Now, obviously, you can't just draw little lines and think that that's the way it's going to work just because you drew the lines. You have to understand why it is you're drawing what you're drawing. Why are you marking it up? What's so significant about this situation here? So let's talk about it. The market had a nice buyer run earlier in 2024, okay? We had a nice breakout, like I told you. If you know me, you know that for the last 3 to 4 years, I've been heavily bullish on gold. Very little selling, and I'm talking about very little selling. I'm the type of trader that will allow the market to return as far as it has to in order for me to execute my bias again. That is the style that I have. Very bias heavy, very trend heavy. When people ask me, what kind of trader are you? Are you a swing trader? Are you this? Are you that? I say I'm a hybrid because it's the truth. I like to run big trends, and within those trends, I like to turn them into little sections and segments as we use the intraday lower frames to be able to break all that apart. So last week, in the end of February, we had a nice bullish run, and once again, we've reached an all-time high, and that's the key right there. We're inside of all-time highs, and we keep doing that. Every time it goes up there, you're probably going to see some sort of correction just due to profit taking and overall just market mechanics. So knowing that, I allowed the market to create a high. Now remember, I did not enter the market until last Friday. Last Friday was the 15th, so it's right here. Let me give it a little check mark, let's go with a little check mark right there. Boom. All right, so this is what happened. Remember, what I'm doing is I am looking at the same thing that you're looking at and coming up with my own assessment as to what it is I want to do here. Now, the market is very systemic, very algorithmic. You're going to see a lot of repetitive things. People talk about fractal markets. It doesn't matter the strategy, whether you're talking about smart money concepts, bank theories, pure price action. Everyone is relying on history and repetitiveness, right? A systemic way of being able, how can you be consistent if you don't find consistent edges in the chart? If you're constantly riding the roller coaster of the market and just feeling like you're guessing, you're never going to be consistent. You might get lucky or have a good run, but being able to execute at a high level requires the ability to find things that are very repetitive in the market. So I'm going to share that with you right now. These are some very simple things that you can do. Understanding that the market does like to create lower lows in a downtrend. Simple. Lower highs and lower lows, just like that. Understanding that the market likes to create Fibonacci's, right? Fibonacci retracement. Simple. 61.8, very common. I'm not telling you anything you don't know if you know anything about Fibonacci's. Very common. Now, my entry didn't happen here. It didn't happen here. It happened here. You have to ask yourself why. Now, the reason is I wanted to make sure. Remember, when I decided to load the account, was it me going, I'm just going to load the account and go search for a trade? No. What it was I noticed that this was ready to go, and then I loaded the account, and then I pulled the trigger. So it happened, first I found the setup, then I loaded the money. That is how I did that. Now, It's easy to do when you have other accounts running, you're not really thinking about it, and then you're kind of looking through your charts and you find a high tier setup that you want, okay? Now, if you're doing it in reverse, what's happening is you have money in an account that you just loaded. Let's say, you saved $5,000 and you loaded it into an account, and now you're ready to start trading. I feel that creates an emotional environment from the start. And what you need to do at that point is slow everything down and make sure that what's in front of you is actually a quality setup. So let's look at this together again. The first Fibonacci was complete. The market has now created a lower high. More importantly, at that point, we close a day. All right, so the day has closed. Notice how many days have progressed. Now, when I decided to do this little example to prove to one of my students that it's not the account size, it's the trader, right? Now, I'm not going to be able to make 6 figures on $1,000 in a week. That's just not something that I can do, but I can get the account to a decent amount with the right setup. Now, if the market decided to just sit still and do absolutely nothing, then this doesn't happen. But because I am using a higher frame, it is more likely, highly probable, that I am going to be able to get at least some sort of reaction that can give me what I want, which is exponential growth on this little bit of money, the $1,200, okay? Let's continue. The market has found the high and created multiple days of closure, and then we drop. So at that point, right now we're just reading market flow. That's it. We create a retracement. One more Fibonacci is created. Boom. Another one, all right? 61.8. So what can we understand now? We're probably bearish, okay? Remember, this all began because we once again have created an all-time high and found resistance. So now I'm going to use what I see here to my advantage on the following trades. The following day, we create another high, like I said, Fibonacci, and it drops one more time. Now we are creating the possibility to the eye of a beginner of another buy, okay? Now, the reaction is normal. Another buy does happen. That's okay. But where it ends is what matters. So coupled with the fact that this is right at the open of New York session, right here, 13:14 GMT, this is where my first trade happened. If you go on my Instagram, you'll probably see it. If you're inside of the group, you'll know that's it. The market then drops for 265 pips, and that is what took the account from $1,200 to about $55 to almost $6,000. This one trade. And if you follow me on Instagram, you also know this is exactly where I exited. Now that's more interesting. Why did I do that? Because a normal Fibonacci trader usually has extensions that tell them when it is that this particular trend, this is a fractal trend, this is an intraday trend, this is not a higher frame trend, is probably over. You're going to get some sort of struggle. So what ends up happening there is the market ends up hitting that negative 27 extension, which is my chance to exit. I took that first trade the whole way down, the whole thing, the whole shebang. So the market then gives me an opportunity to make a choice. Okay, now that I'm at this low, do I continue to just try to see if I can get it another 30, 40 pips? Now you have to ask yourself, what's the reality of this chart? It's bullish. We know it's bullish. You don't have to be an expert to know that, my friends, is bullish. So knowing that it's bullish, you know that every single time that it reaches a new buyer level, which is what it did by going here, that you have a massive likelihood that this thing is going to go back on bullish. And you're going to end up canceling out what you got going on here. So eventually, I'm out of this trade. The market comes back to Fibonacci one last time. I take another sell and once again reach target. Now, what's the key with this? Right? I could have tried to go lower. I could have tried. But the key is this. If I am up 200 and something pips on a trend, or 150 pips on a trend, or even if it was 100 pips on a trend, I have to ask myself, is it worth it to yet again create another lower low, possibly interact with the buyer side Fibonacci, right? Maybe get another 50 to 60 pips out of this and risk everything that I've already made? For most people, it is. They just want to see how much they can squeeze out of this. Why? Because for most people, they have no idea what they're doing. They have no confidence in their eyes and their experience. So what they do is they just hold and hope to the mighty Lord above, or whatever it is you believe in, that the market is going to give them more pips because they don't know if they're going to be able to relive this moment. I call it the home run theory, right? When I'm teaching students, we're not trying to hit home runs. You walk into a home run, right? If you've ever played baseball, I'm into fighting sports, right? I like combat sports. You don't look for the knockout or you don't look for the home run. You see it and you react due to your training, right? Your training is what makes you see it in the moment and something just clicks for you. It's intuition, it's confidence, it's flow state, it's whatever you want to call it. But what you don't do is rely on, I hope this happens. I hope this works out for me, because that is no way to build a career in anything. So the market eventually reaches for liquidity on the buyer side, creates support, and that's why in my community, we ended up taking this beautiful buy. It ended up going swimmingly this week. So before we go, let's check out another setup that was taken inside of the community that I use to be able to produce these numbers. Now, I just cut a GBP USD trade because honestly, I'm sick of the alerts and I'm done. Something that I can tell you right now, just off that little comment, is at some point you got to know when it's over. I think for most people, the only thing, remember, again, I've been teaching people in a one-on-one fashion for 9 years, 8 to 9 years. And I've been in a community situation for 7 to 8 years. I've learned a lot about, it's made me better as a trader because I've learned a lot about how people think, okay? And honestly, if I was able to kind of group all the different experiences together, I'd be able to prove that we're not that different, right? Human nature is a very real thing inside of entrepreneurship, inside of trading. What ends up happening is a lot of these people, including myself, because I've been through everything that I discuss with my students, I taught myself. I didn't have a mentor. I didn't have somebody to help me out with this. So I learned the hard way. When I was learning, it wasn't as popular as it is now. There was no easy access to this. There was no easy information, right? You didn't have things like, I don't know, TradingView. You didn't have MT5. You didn't have funding companies. Brokers were limited. There was a lot of things that didn't exist back then that exist now. Main thing, education, right? Not everyone and their mother didn't have some sort of group. Everyone and their mother wasn't claiming to be a millionaire trader, which is good and bad because some people are legitimate. Some people are very legitimate. They might do the Lambos. They might do this and that. That doesn't change the fact that they know what they're doing, okay? And then there's people who look just like that individual and they might be full of it. It's really tough to know who is what, who's doing what, who's telling you the truth. So I always look at it like this. You give out great information, you try your best to prove that you're worth what it is you say you're worth. And then if that's not enough, then it's not enough. Who cares? Because at the end of the day, you make money in the market and your businesses are just something extra. So what I've figured out through the years is that most people's emotion is the problem. So when I'm teaching someone one-on-one, or even in a community format, what I like to do is begin with just being able to read the chart for what it is. What is it, right? If you can't figure out what's going on, just flow-wise, like just normal, where's the buys, where's the sell, you're not going to be able to do this. It begins with just being able to read the chart. So one of the buys that I had this week is this one. Now, as you can see, after the fact, the market melted. Now, we knew that was going to be the case. If you're in my community, you ask anybody who was in there, they'll tell you the same thing. I mapped this thing out beautifully. And again, it all begins with the same thing, the higher frame. Now, we've been in buys on GBP USD since the low. Again, if I'm lying, I'm dying. We were inside of these major consolidations, right? We've been inside of these moves for a while now. And eventually, the market once again creates a higher high. Do you remember that gold example where the market had a very strong low, right? This is the same thing, but on its head. The market has a very strong high. It reaches for a brand new high and then immediately melts because you have to assume that the market is trying to run the higher frame Fibonacci, and there she is. Me giving out Fibonacci lines, showing you how to draw Fibonacci real quick, I'm going to tell you that's not the secret. The secret is how many times I've drawn this thing, how many times I've done this, how much trust I have with this. So what you're learning right now is preliminary, right? You can have everything that I produce as far as education and the advanced courses and the beginner course. You can have all that. You could find a way to get your hands on it and not pay for it. But at the end of the day, without someone guiding you through that and forcing you to do the work, you got nothing. It's like me, right? I'll give you a personal example. I train constantly, but I also eat constantly. So my weight does not drop. There is a level of sacrifice that is necessary to achieve goals. Most people, they think this is all about drawing a couple of lines and boom, you got it. But how you execute, how the details happen, how confident you are, those things are achieved through time, through you being around something so long that it becomes very normal to you, and where the human side of you just kind of goes away. You become a robot. If I trained and also dieted systemically and I didn't care about food, guess what? I'd look like fucking John Cena, but instead I look like me. Okay, so that's that. Let's look at the market again. The market reaches for a high, the market drops for 300 pips. But before that all happened, I took a buy. How did we get there? Well, the market was inside of a consolidation. All right, so let's go lower frame. We end up creating buyer's Fibonacci, nice and easy, 61.8. Now we're in full flow. We break the position of the old seller resistance. The market hits a target on the seller side, 78.6 fib. Starts dropping. All of this is happening without me. It's dropping, it's dropping, it's dropping, it's dropping, it's dropping. Eventually, because of this strong trend and strong drop, we know this is the trend, but we can assume the market has picked up some seller liquidity, right? Bang, 216 pips to the downside. From there, what do we get? We get a nice drop to the buyer Fibonacci side, and here's my moment. Boom. Easy money. Easy money. Now again, I've shown this. I do this all the time. Does that mean that everybody profits? No, because here's the things that can happen. The trader can be looking at this like, oh my God, this is a 215 pip trend. We're definitely getting down here, and they can sell. They can see these lower lows and they can sell. They can see this next drop and they can sell. Only the trader who is looking at this as a buyer breakout is about to create themselves some profit. Now, just like that gold situation, exit is just as important as entry. When the market reaches the last point of liquidity resistance, we have to exit 1, 2, 3 hours later, and then this thing would have undone your whole trade and then some. So how could they have messed this up? The trader could have messed this up if they were in the buy by not protecting, taking their stop loss and dragging it, by not taking partial profits or all profits, by thinking that, oh, you know what? Let me see if I can squeeze out another 20 pips, or thinking that I can squeeze out another 90 pips. You have to learn. A confident trader, a person who's been around, has to learn, already knows to exit, because there's a tomorrow. There is always another trade. This is just another setup. A person who doesn't know what they're doing and requires more education is always looking to squeeze more out of something because they're afraid, they're afraid that they are going to never be able to acquire another setup as clean, as simple, as monstrous as this one. You learn to treat this like systemically, kind of like the diet thing we just talked about. If I didn't eat for pleasure, go out and celebrate and drink and go have like all types of sizzling fajita plates and go out to steakhouses. If I didn't do that and I just ate steak alone with nothing on it, right? Or I just had broccoli and brown rice or whatever, I know someone's going to be like, hey, be vegan, hey, be carnivore. If I was more systemic about the way I ate and ate very healthy, between the training and the diet, I'd be the pale rock, okay? But other than that, for right now, that's not the way it goes. It will one day, right? When I just decide that it's time. But the example is the same. There's too much humanity. There's not enough, like you got to become kind of like a robot, an emotionless robot for this particular section of your life. And with trading, I think it's extremely necessary. You can't think about what if it goes higher, what if it does this. What's in front of you is what's in front of you. And in this particular GU example, it's time to either take strong profits or exit out fully. It's definitely time to protect, okay? When you don't protect your trades and then you see something like that come back, it is insane when you look at it after the fact, but the amount of people who do this is astronomical. Most people fail in this industry, whether you're trading currencies, indices, you're on gold, you're in Nadex, you're doing options, you're futures. It doesn't matter. Management is the problem because management requires certainty. And when you are uncertain about what you're doing, and when you are always looking to satiate the emotional side of you, you're going to fall into a lot of issues. That's why, what do you see in high tier traders? What do they always tell you? What's the most common thing that that everyone tells you that makes any kind of money in this industry? They tell you to take profits. You never go broke taking profits. They tell you to have proper risk management. Then now again, just in case you skipped this part of the video, I would never treat my money, my personal accounts that I've been growing forever, my funded accounts, right? The main accounts that I have, with this type of disrespect. This was a $1,200 account. By the way, while we were talking, I just cut a trade that I didn't like. All right. So what was once a $19,000 at the beginning of the video, we're now at $20,715. That is where we're at. Okay. So this $1,200 account has made me 20,000 plus, and I've already withdrawn 10,000 of it. So what's left in the balance is $11,116. Not bad for 1 week. As you can see, one more time, here's 3:15:13 GMT. That is when I loaded this account because I saw the gold trade. It was ready to go. Okay. There was also some news, by the way, at that time. I would never trade my personal funds in the middle of a 50-50 environment like that news session that we were living on that day. This is 1 week. I want you to understand that, okay? I'm done with the market stuff, right? I wanted to give you a small little taste of kind of how I approach it and teach beginners. I wanted to also protect you from you, because what's very popular right now, this is me telling you, behind the curtain industry stuff. A lot of people sell affiliate codes and their introductory brokers for their broker companies. They get paid for your deposit. They get paid for you joining, and they get paid for your deposit. They will forcefully or slickly or some way, somehow finagle you to deposit money into a broker that I don't tell anyone to deposit, right? I don't tell anyone what to do with their money. That's my personal thing. I don't want to be responsible for someone depositing their life savings and blowing it in one day. The only people I ever go, hey, yeah, you're ready to deposit, you're ready to be live, it's one-on-one students or community members that they can provide me some sort of history that I can look at and go, you know what, you are ready. And usually I make them start slow. Most people don't want to start slow. They want to deposit whatever they can deposit to the max. The problem is you haven't been through the growing pains of going live. And I don't do the introductory broker unless someone really asks, but I'm not out there peddling brokers. I'm not out there peddling indicators. I'm not out there doing any of that because I feel that it sets people up. Also, I'm making money off of their possible loss. If they're not ready to be live and then they put $5,000 and they lose it, that might be their whole career done. It might be their relationship. Remember, I've been in this industry for a long time, so I've seen it all. I've heard it all, heard some stories, and I feel like I don't want to be a part of some of those negative things that happen to people. So my job and the way that I approach it is I give the disclaimer. This is what you're risking if you do the things that you're doing. So you don't need a lot of money. You can start with $1,000. You can start with $2,000. I mean, if $5,000 to you is nothing, then that's great. Okay, if $10,000 to you is nothing, then that's great. But that's the key. The key is this money that you're about to deposit cannot mean anything to you, because you're going to grow it slowly. And again, the disclaimer on this is that I didn't try to grow it slowly. It was all or nothing. Now, if I was smoke and mirrors over here, I wouldn't tell you that I deposited the moment that I saw the high tier setup. But that's an important part. If you're going to do something like that, make sure you see the setup first. Make sure that everything has aligned and has confluence for you to be able to execute this possibility on whatever chart it is that you're looking at. When we look at the market, when we look at this example, $1,000 created $20,000 of profit. This is the possibilities. Now, let me show you something else. I have many accounts. I trade multiple accounts at once, right? I have my own system of the way that I do things. I'm not going to get into that today, but I even have another withdrawal happening from one of my funding companies. So one of my funded accounts. So let's look at that together. This is an account that I barely traded. This account is ready to withdraw about 8,000. Maybe I got a trade running right now on it, so it'll probably be around like 9,000 on Saturday. So there are so many ways to make money in this space. The idea that just because someone's online talking about it, somehow they don't make money, right? There's no way that an educator can actually execute is BS, right? That's not true. There's plenty of people who do things at a high level, who teach whatever it is they do at a high level. It happens. They become coaches, they become trainers, they become public speakers, because this is not something that you do all the time, and you need some sort of fulfillment. I do, at least. And also, I like making more money. I like having businesses. I like taking this money and investing it into other things that are non-trading related. So for the most part, what I would say is, when you're going to find education, verify that person. Go to the students don't speak to them. Why would I say, oh no, I suck, I don't make any money? That's not something that I'm going to do. What I would always suggest is go to the students. Go to the community. Ask them about that person who runs that community. Ask them, do they show up? Are they consistent? Are you learning anything? Have you had any success? How do you feel about it? Again, if you go to my Instagram, you can speak to whoever you want to speak to. I tag them. They're in the comments. You can go ahead. And here's the best part. They don't get paid to do that. There's no there's no referral codes for sending people my way. It's just a good old thank you. The testimonials, they don't get paid for that. Right? It's just them saying thank you to me for helping them out, because most of these people have been in multiple communities and no dice, no help, no issue, no real value given for whatever it is they're trying to pay. Now, I'm not tooting my own horn. Maybe I am. But what I'm trying to say to you is, there are people out there who are willing to help you. You don't have to come to me, right? I will never follow up with you. I will never bother you. If you watch this video and comment, I'm not going to message you and go, hey man, I saw that you're interested in joining my community. You're going to have to find me, and we're going to have that conversation. I also don't allow just anyone and everyone to join the community. You have to have the right mentality, because this is a lot of work, and I make people work. That is my thing, because I don't believe that you can make it in this industry with that actual experience. I don't believe that you can make it in this industry without putting yourself through some sort of immersion. That's just the way that I approach it. It may be for you, it may not be for you. So in this video, hopefully you learned something, a little bit about market flow, some quick little Fibonacci work. The main thing that I wanted to show you is that you don't need a lot of money. You don't need to risk it all in order to grow something. You can achieve a decent level of skill and profit in this space, but you must know that your expectation is going to be that you're going to pour in a lot of time. For beginners, I always say the same thing. Don't expect anything in the first year. Don't listen to the people out there that say it's so easy, because what you'll notice with the people that say it's so easy, their proof is very fluffy. It's very light. It's, as I like to say, smoke and mirrors. Consistency is king in this space. And one thing that I like to do is prove my consistency. I wish you all the best. As always, happy trading.